Hi, Harry here with the rant on June 16th. Markets on crack, never fail to disappoint. I still feel like we did put in that top in late 2021, January 4th, the last one on the S&P 500. That was such a progression of tops around the world. That just really looks like a long-term top, and still does. So we've taken the momentum out of the markets, but boy, not the crack, okay? This bounce now has gotten irrational, surprise, especially since early April. But we have one last divergence that we've never had before. The crypto is the new up-and-coming sector, led by Bitcoin and Ether, especially Bitcoin. But those are not in the stock market, except for a few stocks like Coinbase. But Bitcoin has been heading down since early April in this rally, while the NASDAQ, and especially the NASDAQ 100, the largest NASDAQ stocks, go into this, melt up. I think that's Edward Yardeni just called this a melt up. Now that's always dangerous. Melt ups mean stocks are just going up, or whatever's going up, for no good reason, because there's nowhere else to go and nothing to stop it. So here's where we're at. I've had for a good while now, the fourth wave bounce off of the first crash down. And of course, remember, we needed 28, 30, 40% or more, which we got 38% in the NASDAQ, 28% in the S&P 500, to say the bubble's over. Very likely over, okay? So we got that first crash, and it went down in 5 waves. So the first target I've had was the fourth wave bounce, and it was a strong one, okay, last year, okay? So it made an even more attractive target. Well, first the NASDAQ tested that. Well, kept going. The S&P 500 just tested that this week, caught up, and now it's staying above it. So that means we may go a little higher than that. Now, this really is undeserved. I mean, we're in a slowing economy where the Fed has sworn they're going to slow it no matter what. They may not have done enough yet, but the last 4 quarters, 1.4% real GDP. That's very slow. The stock market has no business running up and trying to make a new high in a market that slow in this sort of case. And again, Federal Reserve finally paused. Well, that was totally expected, but they were very clear that it's likely that there'll be another 50 basis points, another probably 2 25 basis point hikes coming after this pause. So it does make sense to pause and look at this, but they're saying this is likely. The market should not have been up on that. That's how much this market's on crack, okay? So now I'm looking at the second wave highs, in that bounce. The second wave bounce on the way down last time, and those are now more the targets, okay? So what does it take from here to get to those second wave highs? 7% rally in the NASDAQ, only 4.3% in the S&P 500, and of course 10.8% in the Russell. And getting to new highs, I still say, not going to happen. There's a slight chance now, because the S&P is 8.4% from the all-time high. So you have to admit there is a chance with this much momentum that the S&P might eke out a new high. But Russell 2000 and NASDAQ not. NASDAQ is 18.5% away, and then Russell 2000's 30%. Okay, so again, what do you look for? At major tops like this, major divergences, and no matter how this works out, here, there's huge divergences now between the small caps, the Russell 2000, and the S&P 500 and the leading kind of NASDAQ. Huge divergences, even if the S&P 500 makes a new high, okay? And now we have this new divergence where in the last month and a half, the NASDAQ and the NASDAQ 100, the QQQs have continued to melt up increasingly, yet Bitcoin has continued to fall. This is the most bearish sign. This is the final divergence we can expect to see here. And I know this is getting confusing to everybody. I don't like it. Nobody likes it. But hey, we're dealing with markets on crack. We're dealing with markets that have been living on nonstop stimulus for 14 years until they finally tightened March of last year, okay? And since then, things have slowed down, but not quite enough. And the Fed's in this, conundrum. Where do they keep raising? And they've said it clear, and the markets are ignoring this. We will raise more if we have to. We're just taking a skip here, they call it, instead of a pause, okay? So again, what we're looking at, the key chart I've been focusing on in the newsletter for our subscribers has been what I call this Russell 2000 triangle sideways, okay? And I use the RWM, which is the inverse, the short ETF for the Russell 2000 recently. And basically this triangle gives us some real clear boundaries, what it's going to take for this bearish trend to continue, which is still the most likely by far, or what might create a slight new bullish trend. So on the RWM, which is what I used in the newsletter recently in the updates, okay? A break above 2520. Remember, this is bearish, so this going up means the market's going down, the Russell 2000 going down. A break above 2520 would confirm and strengthen the bearish trend down for stocks. So that's the key thing I'm looking at here. And we're at about 23 this morning, give or take, okay? So this is not far away. Conversely, if we were break below 2180, okay, on the bottom end, that would say, oh gosh, yes, we may, the S&P and some other, may make new highs and we may continue up for a while. Again, I still think this is the less likely scenario here. So again, be on alert. Anybody who is sold recently as we hit this fourth wave target, fine. This is not the time to get back in, okay? It's not the time for anybody to jump in the markets, but of course, that's what the markets are trying to do. Get the dumb money to come in. Yes, the big crash. No, it's over. We're in a new bull market. We're going to make new highs any day now, any weeks, months. That's what it wants to do so it can crucify everybody again. So this is not the time to get back in. Even if we got this bullish signal short term, it would really still be too late. Right now, it's better to be out. Or for aggressive people, this is an excellent time on these same targets to get short. We break out the bottom, at the top of this RWM short Russell 2000. Of course, the small caps are leading this, so that's the best way to look at this. And then it just means, okay, shorts are going to keep the payoff and keep short or get more short. If we break up to this other end, 2180 on RWM, it means, want to give the market a little leeway before you short, or if you still have some stocks, you might hold them a little longer. But still, again, I think this is the last divergence, and I really I think nobody's going to see, everybody sees the small caps underperforming large caps, and that's the classic divergence. I don't think anybody's seeing that crypto and Bitcoin is underperforming very markedly just in the last 6 weeks. And if that continues, I think that is what will tip this thing over. So I'm going to be watching Bitcoin and the crypto very closely, and we will keep you updated.